Hello, dividend growth stock enthusiasts. Colby, the DGI crab here, wishing you a very happy New Year's Eve. Coming at you December 31st, 2024. Markets are closed for the final time of the year. I'm here to talk about what my personal expectations are for my own personal investing strategy for 2025 and just kind of some musings as to what I'm looking out for in the market. My primary metric personally for your average year yield compared to current day yield and what I think that those metrics might look like going into next year. Now, I'm not in the business of making predictions. Anybody that is making predictions about the market or an individual stock and they think that it's can't miss is more often than not going to be wrong. No matter how much research that a person does, it's impossible to know exactly what's going to happen in the market week to week, month to month, or even day to day for that matter. Any kind of events in the world, in the country, could impact the market in positive or negative ways. And none of us have a crystal ball to know exactly what that's going to look like. So that's why, in my opinion, it's so important to have a consistent strategy that you can stick to and rely upon for the long term. Because if your investing is impacted greatly by short term ripples that happen in the overall market, then my personal prediction for you is going to be that you're going to have some pretty mixed results for the most part. So, I want to talk about how I think 2025 could potentially look like for my personal strategy. And again, please keep in mind, I'm not a professional financial advisor, so you should always do your own due diligence before you invest any of your hard earned money now or in 2025. So for anybody that's new, I will just always remind you all, this channel is unique in that I focus only on 60 high quality dividend growth stocks. I've split them into 4 separate categories or tiers based on the age of the investor. Tier 1 for the younger investors, Tier 4 for the older investors, and everything else is in between. Age and time horizon is the most important metric for any dividend growth stock investor to consider if it is your goal to one day live off of your dividends in retirement. Younger investors should be focusing more on stuff that may not yield a ton right now, but is going to grow that dividend rapidly year over year. Whereas the older you are, the higher yield stuff that is slower growing becomes a bit more appealing as you need to start generating that capital with your active income immediately. So as opposed to breaking it out on the 4 different tabs, I just have this one master tab here that has all 60 of the stocks. I have them organized, as you are probably used to by now, by my valuation metric. Anything that is currently yielding at least 30% higher than the 4-year average yield is in the green, 20 to 29% in yellow, and red is everything beyond that. So does anything change for me from 2024 to 2025 for my personal strategy? It does not. My channel is still relatively new, having launched in the summer of 2024, but my personal strategy for me is not. I've been working at this for several years now and have remained more and more consistent with it as time has gone on. And I've really gotten into a rhythm personally with investing in the way that I do. I want to acquire yield on individual stocks when it's much higher than it typically is. And the 4-year average yield for me is what I'm looking at as opposed to the 5-year average. Now, some people are going to look at the 5-year average yield as opposed to the 4. For me personally, I like that Seeking Alpha keeps track of the 4-year average yield because I'm just of the opinion going back 5 years is a little bit too much. I'm primarily concerned with 4-year average yield. I think going back 4 years is far enough to get a picture of what that stock should be yielding based on the averages. Over the course of the last 6 months, I've certainly been very focused on buying things like Nike, Archer Daniels Midland, Hershey. Target has been in my buy zone quite a bit, Hormel, of course. Any of the stocks that are down here in the red, meaning they're ones that I consider more overpriced at this point in time, I don't sell them. I just will continue to hold on to them. I'll allow dividend reinvestment to do its thing, and just let the drip gradually grow any of these positions I have established. But I'm not going to add new money to any of this stuff when it looks like it's trading at a bit of a premium. Now, there's some reason for this. One is I like to bargain shop, of course. That's fun no matter what you're shopping for. Honestly, everybody likes to get a good deal. But there's always going to be corrections in the market. And my personal opinion, and from what I've seen as an investor over the years, is that stocks that are trading at a super premium generally have further to fall in the event of a major stock market crash or correction, however you want to look at it. Whereas the ones that are already fairly beaten down, like Nike or ADM or Hershey, if the overall market crashes in the coming months, well, probably those stocks are going to go down a bit more too, but the wind's already been taken out of their sails for the most part, so my assumption would be that they don't have as far to crash as some of the other ones that have been flying high for quite a long time, like Broadcom or Parker Hannifin, or what were some of those other ones that were way down here at the bottom? Centos, Caterpillar. A couple of years ago, you could have been buying Caterpillar for under $100, or not under 100, in the mid to low 100s. It's shot up over the last 18 months or so. JP Morgan was one back during the COVID crisis, especially. The banks were really having a hard time through that. A lot of these were. Now, nobody likes to talk about COVID. It's in the rearview mirror, and I'm, for one, personally am glad of that. But what I want to do is just show you here the S&P 500 year to date. Now, specifically, this chart is for VOO, the Vanguard S&P 500 ETF. But the other ones are all basically the same as this. They've got the same stocks in them, right? Year to date, January 1st to December 31st, VOO/S&P 500 is up 23.35%. 2024 has been a very, very hot year for the stock market. The historical average of the S&P 500 in terms of growth is about 11%, give or take a few basis points. And obviously that's an average. It's not a flat 11% year in and year out. Sometimes, like this year, it's way up 23%. Other years, it goes down. Some years, it's relatively flat. So it all kind of averages out to be about 11% year over year over year. The longer you're in the market, that should be pretty consistently what your return is. Now, that being said, if we take a look at the 5-year history, and keeping in mind, I'm looking at 4-year average yield. So going back a full 5 years, my 4-year average yield metric is not capturing anything prior to December 31st of 2020. That's the cutoff. So remembering COVID, when we had that last major market crash, didn't last very long, but it was there. It was a crash nonetheless. All stocks, including the blue chip stocks that I focus on in that group of 50, had much higher yields than they typically do because all of the prices fell. And as the year has gone on here in 2024, every single week when I do those Friday videos, I'm updating that 4-year average yield. I do that once every single week. And typically a lot of them just stay exactly where they are. Some of the ones that have been down for a while, like Nike or Hormel, those 4-year averages tick up a basis point here or 2 basis points there week in and week out as they're gaining time of being down. But what we've been losing here, for the most part, is a down 2020, where a lot of these stocks were yielding quite a bit higher. And now, what we're going to see in 2025 is we're going to start lopping off the 2021 data. 2021, for any of you who were around investing and can remember what was going on, was a very hot year in the stock market. We'd kind of gotten past the initial crisis of COVID, not to say that there weren't still things going on that were affecting the market, but there was a lot of excitement that things weren't quite as bad as we thought they might have been. There was a lot of money that got printed. And when a lot of money gets printed, it's got to go somewhere. A lot of it ends up going into stocks. Not all of it, of course. Some of it goes into crypto. Some of it goes, into other alternative investments. But the stock market is just such a major investing vehicle for people to park their money as opposed to holding too much money in cash. So 2021, we had this hugely hot stock market, kind of similar to what we've had here in 2024. So as we go through and start lopping off week by week some of this 2021 data where yields were lower than they typically are for a lot of these, I think what we're going to find is that the 4-year average yield on a fair amount of these stocks is actually going to start creeping up a little bit, or wait, excuse me, down, because we're going to start getting rid of some of these hotter months. But then in 2022 wasn't a fantastic year of the stock market. A lot of down months, just kind of meh. You could see here from the beginning of 2022 to the end of 2022, the markets were down that year. 2023, there was recovery, certainly, but it was a relatively flat year overall. So that 4-year average yield is going to be encompassing all of this, but it's going to be shaving off a lot of this hot stock market activity. So I think what we're going to find is that the 4-year average yields on a lot of these are going to climb, and then we'll see if there's any kind of a correction in 2025. What that might mean is some deals might not look as appealing as they might, because this year we've gotten rid of the 2020 data in my 4-year average metric. 2020 was a bad year. This year in 2025, we're going to be getting rid of 21, which was a very good year. So I'm going to be very curious to see how that impacts the individual stocks, whether or not that unearths any interesting new deals or new buying opportunities. But overall, if the 4-year average yields continue to go up, then eventually deals will become less and less appealing. I looked back when I began the channel in the summer, the 4-year average yield of Nike, for example, was 1.04. So over the course of 6 months, it's climbed up to 1.15. Not a tremendous amount. But you've got to remember, over the course of the long haul, when we're looking at 4- and 5-year periods of time, a bad 6 months only does so much to impact an individual stock's overall numbers. So with all of that being said, I'm not necessarily a person that sets year-out financial goals. I think it's not a bad idea to do so, to say, hey, by the end of 2025, I'd like to have invested X, or have my passive income go up a certain amount. I'm more of a shorter-term, goal-oriented person, because there's so many things that can happen in your personal life, not just the stock market over the course of 12 months, that can throw certain things off. So I'm more of a mind to set quarterly goals for myself. Over the course of 3 months, I want to make sure that I invest a certain amount of dollars. Anything above that is great. And then at the end of that first quarter, I can reassess, see what things are looking like, and make plans for the next quarter after that. If I had a New Year's resolution that I'm going to set, it's going to be that I'm staying the course, and I'm going to continue to be confident in adding passive income when it looks like it's on sale. And I'm not going to have any fear of missing out on the stocks that look overpriced, because half of my money at least is always going to be going into high quality ETFs. So I will be getting exposure to some of those individual companies that I just haven't been buying for the last year. And then I think the pairing of ETFs along with the individual stocks is so handy, not just for diversification, but it can keep you from feeling like you're missing out. I'm going to wish all of you all a happy new year. Thank you for being with me here in the first year of the channel. I can't wait to give you more good content in 2025. Take care, everyone.